Imagine helping your child qualify for a mortgage by putting your name on the title of the property. And years later, the tax authorities step in and say, you are the actual real owner and you owe the tax on the profit. That's exactly what happened in a recent Quebec court case, and it's a powerful reminder about beneficial ownership. Hi, my name is Amandeep Singh and I'm the CPA and founder of Cloudiverse CPAs, where we help families and businesses avoid costly tax mistakes like this one. On April 23, 2024, the Court of Quebec released its judgment in Girard versus Agence du Revenu du Québec. The case involved Claude Girard, his daughter Emmanuelle, and several real estate transactions between 2006 and 2009. Mr. Girard argued that he was only a prête nom, that is a nominee, for his son Matthew. He said he appeared as a co-owner on 3 properties only to help with bank financing, but he wasn't the true beneficial owner. Revenu Quebec disagreed. After auditing the family's real estate dealings, they reassessed Claude beyond the normal limitation period and added unreported income of $11,218 in 2007 and $34,000 in 2008, treating these profits as business income, not capital gains. They also applied gross negligence penalties of $1,600 and $4,000. The court looked at the facts closely. Mr. Girard provided no documentary evidence that he was just a nominee. He could have shown his son's credit file, a letter from the bank requiring his co-signature, or a notarized declaration clarifying ownership. In fact, his wife had done exactly that when helping their daughter, and the court did accept their arrangement. But Claude had nothing similar in place. The judge also noted that Matthew had already bought 2 properties on his own and made substantial profits, showing he had the financial capacity. That undermined the idea that Claude's name was only needed for financing. On top of that, the court highlighted how Claude was an experienced businessman in construction and had a company in the sector, and that these quick flips of land and houses, same held only a few months, were clearly commercial in nature. So what did the court decide? For Claude, the nominee argument failed. He was a beneficial owner. The profits were business income, not capital gains. However, the court did cancel the penalties, giving them the benefit of the doubt. For his daughter, Emmanuelle, she had sold a part of a subdivided property to her brother for $70,000 in 2009. Revenu Quebec called its business income, but the court found it was a capital gain. Still, she couldn't use the principal residence exemption because the portion she sold had no building on it. Again, the penalties were cancelled in this case. The key lesson here is clear. If you're putting your name on the property just to help someone else, you need solid documentation, and without it, tax authorities will treat you as a real owner, and that means tax on gains plus years of litigation. At Cloudiverse CPAs, we work with families to prevent exactly this kind of outcome. We coordinate with notaries and lawyers to set up clear agreements, ensure the tax reporting matches the legal reality, and protect you from unexpected assessments years down the road. Thank you for watching. If this video was helpful, please like and subscribe for more tax insights. I'll see you in the next one. Bye.